Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
for the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Russian oil and gas condensate output out last month exceeded 10 million barrels per day, BPD, for the first time since April, according to Reuters calculations based on an Interfax report, which cited Energy Ministry data on Wednesday. Production was slightly up from 9.98 million barrels of oil per day in October, even as a group of leading oil producers debate whether to ease oil output cuts from January 1st as planned, or continue to produce under the same rate amid sluggish oil demand.
Oil prices rose on Wednesday as the market awaited a pact from producers on output, which many traders expect will continue to be reined in, and Britain's approval of a COVID-19 vaccine gave hopes for a demand recovery a boost. Prices were hit earlier by a surprise build in oil inventories in the United States and as OPEC and its allies created uncertainty with a two-day delay to a formal meeting to decide whether to increase production in January. Brent crude oil futures were up 34 cents, or 0.7%, at $47.76 a barrel by 1500 GMT, while West Texas Intermediate crude was up 36 cents, or 0.8%, at $44.91.
Moving on to the top news in the energy sector.
A fire at Norway's Jelbergaten industrial facility on Wednesday triggered an evacuation of staff and the shutdown of Europe's largest methanol plant and a gas processing terminal, state-controlled oil firm Equinor said. The methanol plant accounts for more than 25% of European production and has an annual capacity of around 900,000 tons, according to Equinor data, and is owned by Equinor and ConocoPhillips. This accounts for about 10% of European methanol consumption.
Indonesia must make policy changes to ensure it can keep subsidizing its ambitious biodiesel program, the head of a government agency in charge of collecting and managing palm oil export levies, told a virtual conference on Wednesday. The world's biggest producer of palm oil makes it mandatory for diesel to be blended with 30% bio content, but plans to increase this to 40% have been delayed due to funding issues. Although biodiesel promises lower emissions, land clearance to grow palm oil has raised concern about deforestation. Moving on to metal price moves. Global aluminium producers have offered Japanese buyers premiums of $138 to $140 per ton for January to March primary metal shipments, up 57% to 59% from the current quarter, amid recovering demand, three sources directly involved in quarterly pricing talks said on Wednesday. Japan is Asia's biggest importer of the metal, and the premiums for primary metal shipments it agrees to pay each quarter over the London Metal Exchange, LME, cash price CMAL0 set the benchmark for the region.
Iron ore futures jumped on Wednesday, with the Dalian benchmark contract hitting a record high, underpinned by strong demand for the steelmaking ingredient in top ferrous metals producer China. The most traded iron ore for January delivery on China's Dalian Commodity Exchange gained as much as 3.5% to 934 yuan and 50 fen, $142.44 a ton, before ending daytime trade at 934 yuan. Iron ore on the Singapore Exchange jumped 2.4% to $130.24 a ton by 07:05 GMT, advancing for a seventh straight session. We will now look at the top news in the agricultural sector.
Chicago soybeans and corn were trading at their lowest in 2 weeks on Wednesday, weighed down by fund-driven liquidation and improving crop weather in Brazil and Argentina. Wheat was trading sideways after suffering losses in the previous two sessions that dragged the market to its lowest in 2 months on a lack of demand for U.S. cargoes and an improving global supply situation. The most active soybean contract on the Chicago Board of Trade fell 1.5% by 12:08 GMT to $11.44 minus 1/2 a bushel, while corn gave up 1.2% to $4.15 minus 3/4 a bushel. Earlier in the session, both markets hit their lowest since November 16.
Finally, we have the most recent news on the financial market. With Brexit trade talks at a make-or-break moment, According to the EU's chief negotiator, sterling could be in trouble if negotiations fall through, with ominous technical signals already flashing. GBP/USD is exhibiting a bearish engulfing candle pattern after a failed breakout above its downtrend line from 2007. Meanwhile, GBP/JPY's rise to a high of 140.44 was rejected by the 76.4% FIBO of September's slide, creating overbought sell signals from RSIs, reminiscent of September's major top.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.